The UK housing market experienced a dramatic slowdown in March, as the race to beat the stamp duty holiday deadline concluded. Nationwide Building Society's latest figures reveal a shocking stagnation in average house prices, hovering at £271,316, a stark contrast to the 0.4% monthly increase observed in February. This marks a significant turning point, highlighting the considerable impact of the temporary tax break's expiration. The dramatic slowdown paints a compelling picture of a market grappling with the aftermath of a frenzied period. The final weeks before the March 31st deadline witnessed a frantic rush of buyers determined to finalize purchases before the stamp duty thresholds reverted to their previous levels. Removals firms were inundated, and the property market buzzed with the energy of a deadline-driven sprint. This surge of activity artificially inflated recent figures, making the current stagnation all the more noticeable. London, a typically vibrant hub of property activity, bore the brunt of this shift. It recorded the lowest annual price growth in the entire country, underscoring the nationwide cooling effect. The implications are far-reaching, impacting not only London's affluent market, but reverberating across the entire UK. The once robust market has entered a period of uncertainty, leaving many potential buyers and sellers wondering what the future holds. This significant shift underscores the volatility of the UK housing market and the powerful influence of government policy. The temporary stamp duty holiday, while designed to stimulate activity, ultimately created an artificial boom followed by an abrupt correction. The resulting stagnation raises crucial questions about the market's underlying health and its resilience in the face of external pressures. Economists and analysts are now scrutinizing the data, attempting to decipher whether this represents a temporary lull or the beginning of a more significant downturn. The impact on individual buyers is equally significant. Those who missed the stamp duty deadline now face considerably higher tax bills, potentially amounting to thousands of pounds. This unforeseen financial burden could deter potential buyers, further dampening market activity. Conversely, sellers might find themselves in a less advantageous position, needing to adjust their pricing strategies to accommodate a less competitive market. The contrast between London's sluggish growth and the relative dynamism observed elsewhere, particularly in Northern Ireland, underscores the regional variations within the UK housing market. This disparity highlights the complex interplay of local economic factors, demographic shifts, and government policies, painting a picture of a market far from homogeneous. Understanding these regional disparities is crucial for navigating the evolving landscape of the UK property sector. The coming months will be critical in determining the trajectory of the UK housing market. Will this stagnation represent a brief pause before a resurgence, or is it a sign of a more protracted slowdown? The answer remains elusive, with economists offering differing perspectives and predictions. However, one thing is certain. The March figures mark a pivotal moment, offering a stark reminder of the market's susceptibility to external influences and the unpredictable nature of the property sector. The dramatic slowdown serves as a cautionary tale, highlighting the potential consequences of artificially stimulating demand and the importance of a nuanced understanding of market dynamics. The future of UK house prices remains a subject of intense speculation and analysis, with the implications for both buyers and sellers profoundly significant.